USD, MXN price annual forecast. Economic slowdown, monetary policy. Trump to weigh on peso in 2025. The Mexican peso is expected to be driven in 2025 by the monetary policy divergence between the Banxico and the Fed. The contrast between Mexico's economic slowdown and dynamism in the US will likely boost the greenback. The USD-MXN pair is set to be underpinned by Donald Trump's trade policies amid the reacceleration of inflation. The Mexican peso, MXN, enjoyed a wild ride in 2024 against the US dollar, USD, initially gaining some steam. However, several factors were headwinds for the Mexican currency, such as general elections in Mexico and the United States, US, the ongoing economic slowdown, monetary policy, geopolitics, and the end of the carry trade. The peso is foreseen to remain volatile in 2025, beginning with the inauguration of US President-elect Donald Trump and particularly his protectionist policies that, if implemented, could spark a reacceleration of global inflation. Mexican peso in 2024, calm before the storm. The Mexican peso began the first quarter of 2024 on the front foot, appreciating modestly due to the so-called carry trade. The interest rate differential between Mexico and the US, of more than 575 basis points, BPS, benefited the former. However, Banco de Mexico, Banxico, began its easing cycle on March 21 by reducing rates by 25 bits per second. Although Banxico's decision was expected to weaken the peso as it shrank the interest rate differential, it didn't. However, tensions in the Middle East were about to rise, spurring the first spike in the exchange rate. Mexican peso depreciates sharply as Middle East conflict escalated. On April 9, the USD-MXN was trading at around 8-year lows of 16.25, but Iran and Israel exchanged attacks between April 13 and 19, sparking a flight to safe haven assets. Consequently, the greenback rose to the detriment of the Mexican peso as news headlines crossed the wires, with the USD-MXN soaring from around multi-year lows to 18.15 on April 19. In a 7-day span, the Mexican currency depreciated by over 10%. Banxico cuts again, politics take center stage. The second quarter featured Banxico's second interest rate cut on May 9 in a 3-2 split vote, with Deputy Governors Heath and Espinoza dissenting to cut rates. In June, President Claudia Sheinbaum Pardo of the ruling party Morena became the first female president. Once the results were known, the USD-MXN traded volatile, with the peso depreciating over 4% on June 3 amid fears that Morena and its coalition would secure the majority in Congress and change the constitution. Investors ditch MXN as Congress approves reforms, Fed turns dovish. The third quarter was challenging for the Mexican currency, which began to be sold after former President Andrés Manuel López Obrador presented bills for the upcoming Congress. One proposal was to reform the judicial system, and the second was to dissolve autonomous bodies created to level the playing field between the government and private companies. Since the judicial reform was approved in September, the Mexican peso extended its landslide, as the USD-MXN rose from around 18.99 to 20.22, hitting a yearly high back then. In the U.S., Federal Reserve Chairman Jerome Powell said in Jackson Hole that it was time to begin lowering interest rates as the risk of inflation was tilted to the downside. At that time, the U.S. labor market seemed to weaken further, with risks of the unemployment rate skewed to the upside. Sheinbaum takes office, Trump wins U.S. election, and Fed eases policy. As the year agonized, the Mexican peso lost steam after Claudia Sheinbaum began her 6-year term in October and Donald Trump won the U.S. general election. U.S. President-elect Trump began his harsh rhetoric against Mexico, threatening to impose tariffs on Mexican imports to the U.S. if the country didn't agree to fight drug cartels and stop illegal immigration. One U.S. tariff will be followed by another, from Mexico, and so on until we put common enterprises at risk, Sheinbaum said in response to Trump. The main victims will be U.S. consumers who buy manufactured cars from Mexico, she added. On the monetary policy front, the Federal Reserve cut rates by 100 basis points in the second half of 2024, leaving the Fed funds rate at the 4.25%–4.50% range. Meanwhile, Banxico slashed borrowing costs by an additional 75 bits per second of cuts, which added to the already 50 bits per second cut earlier, leaving the main interbank lending rate at 10.00%. What's next for the Mexican peso in 2025? The peso will be influenced by economic growth, monetary policy, inflation, and, you guessed it, U.S. President-elect Donald Trump. If Mexican President Claudia Sheinbaum reaches agreements with Trump's agenda, that could remove one factor and leave market players focused on purely economic themes. Divergence in economic growth. Mexico to grow less than U.S. Mexico's economy is expected to underperform compared to the past 2 years. However, the services sector continues to outperform manufacturing, supported by subsequent government increases in minimum wages. Overall, growth is expected to be sluggish due to the government's fiscal consolidation plan, which was considered in the 2025 budget, and Banxico's still high interest rates. Banxico Private Economist survey showed that analysts estimate the economy will grow 1.17% in 2025, below the 1.55% seen in 2024. In the U.S., the Summary of Economic Projections, SEP, showed that Fed policymakers estimate the U.S. economy will grow 2.1% in 2025, up from the 2% previously expected. Inflationary pressures build in the U.S., not so in Mexico. Mexico's disinflation process has evolved substantially during the year. November's Core Consumer Price Index, CPI, dropped 0.3 to 3.58%. Even though it remains above Banxico's target, the central bank remains confident it will reach the 3% goal by the last quarter of 2025 or early 2026, as revealed in December's meeting monetary policy statement. In the U.S., the story is different. Inflation has reaccelerated during the last 5 months. The Core Personal Consumption Expenditures, PCE, price index, the Fed's preferred inflation gauge, hit its yearly bottom of 2.6% in June 2024. Inflation had risen to 2.8% in November, indicating that monetary policy wasn't as restrictive as many Fed officials thought. Alongside that, the upcoming White House administration's threats of imposing tariffs, deregulation, and tax cuts could deteriorate the U.S. inflationary scenario. Will the Fed pause as Banxico extends its easing cycle? Monetary policy in the U.S. and Mexico is expected to diverge in 2025. Banxico is expected to continue its loosening cycle, with estimates that the primary reference rate would be lowered from 10.00% to 8.00%, according to Banxico's private survey. This implies a reduction of 0.25% in each of the 8 monetary policy meetings. Additionally, the Mexican institution opened the door to large-scale rate cuts after tweaking its policy statement. In view of the progress on disinflation, larger downward adjustments could be considered in some meetings, albeit maintaining a restrictive stance, it said. Meanwhile, Federal Reserve officials have adopted a more cautious stance as data suggested that the economy is in a very good place, according to Fed Chair Jerome Powell. Even though the board agrees that easing policy is needed, they also acknowledge the pace should be reduced. The Fed's December projections suggested that policymakers consider 50 bits per second of easing, down from the 100 bits per second foreseen in September. Overall, the interest rate differential between Mexico and the U.S. could be reduced from 550 bits per second to 400 bits per second in the upcoming year. Therefore, further USD MXN upside is possible. Trump's tariffs, lower taxes set to underpin USD MXN. The Mexican peso is already facing the challenges of a Donald Trump presidency, even though he won't take office until January 20th. His victory keeps the financial markets on their toes as some of his policies tend to be protectionist and focused on domestic issues. Trump has threatened to impose tariffs, even saying it's his favorite word. So far, he signaled that he will impose tariffs on imports from Mexico if the country fails to improve fighting drug cartels and stop illegal immigration. This could lead to Mexico's retaliatory actions. Nevertheless, Trump believes that imposing tariffs would benefit the U.S., although most trading partners warned that the costs would be passed on to customers. If Congress approves tariffs, or through presidential executive orders, these could exert upward inflation pressures and trigger another round of higher prices, preventing the Fed from easing policy. USD MXN technical analysis, awaiting catalysts. The USD MXN is upward biased, as the monthly chart depicts, yet it shows signs of consolidation as buyers lose steam after reaching a double bottom profit target objective at 20.34. The exotic pair cleared the ladder and hit a year-to-date YTD high of 20.83 before retreating to the current levels. Suppose the pair finishes the year confined within the 19.76-20.83 range. In that case, that will confirm the formation of a bearish harami candle chart pattern, which opens the door for further downside. The Relative Strength Index, RSI, shows buyers are losing steam, indicating that consolidation lies ahead. In that outcome, sellers would have the upper hand. The USD MXN first support is seen at the 100-month simple moving average, SMA, of 19.47. A breach of the latter will expose the 50-month SMA at 19.18, followed by the psychological 19.00 figure. On further weakness, bears could drive the exchange rate toward the previous double bottom neckline at 18.50. On the other hand, if buyers hold USD MXN above 20.00 and push the exchange rate above 20.50, this could open the door for gains. The first resistance would be the 2024 peak at 20.83, followed by the 21.00 mark. Once cleared, key resistance levels emerge at the March 2022 peak at 21.46, followed by the 22.00 figure ahead of the November 2021 high at 22.15. Conclusion. The Mexican peso faces a confluence of challenges heading into 2025, ranging from domestic political shifts to international geopolitical dramas. The currency's trajectory will likely be heavily influenced by the interplay between Mexico's monetary policy and its economic growth relative to the US. This would usually favor further USD MXN upside, as the interest rate differential would reduce. Additionally, the greenback would strengthen if the incoming U.S. administration under Donald Trump introduced fiscal expansionary policies and imposed tariffs, as they are inflationary prone. On the other hand, geopolitical risks looming in the Middle East and the Russia-Ukraine conflict loom, favoring a flight to safe haven assets, implying USD upside and MXN downside.
Friends, thanks for watching. Please subscribe my channel for more videos.